Welcome to Valuation Street. Today we're doing another deep dive, this time into Alphabet, or GOGL.
Right. And you've pulled together some great material for us to work with.
Yeah, we've got the latest Q1 2025 earnings release, their investor presentation, a pretty balanced newsletter take, and several key analyst reports, too.
So the mission today
is really to cut through the noise. We want to pull out the key insights to help you, if you're considering an investment, understand Alphabet's current situation and, well, its future prospects.
makes sense. So financials, the different business parts, risks, opportunities, the whole picture.
Exactly, and what the different valuations are telling us. Okay, let's get into it. Q1 2025 performance.
Well, overall, pretty strong momentum. Consolidated revenues hit $90.2 billion. That's a solid 12% jump year over year.
And even better in constant currency, right? 14%.
That's right, 14%. And what's key here, I think, for an investor is that it wasn't just one thing driving it. You saw double-digit growth in Google Search and their other stuff. Same for YouTube ads.
And the subscription segment, too, wasn't it? Subscriptions, platforms, devices.
Yep, strong double digits there as well. Hit $10.379 billion, up quite a bit from last year.
Okay, and the big one everyone watches, Google Cloud.
Huge growth there. Significant double digits, reaching $12.260 billion. That's up from $9.574 billion.
So what's that, like a 28% increase year over year?
Exactly, 28%. And they even noted that the core platform, GCP, grew at a much higher rate than that overall cloud number.
But there was a slight caveat from one analyst, wasn't there? Something about expectations.
Yeah, one analyst pointed out it slightly missed what the market was hoping for, and they flagged potential, let's say, variability or choppiness in Q2, Q3 growth.
Why is that?
Mostly waiting for more data center capacity to come online later in 2025. It highlights that scaling challenge, even for giants like Alphabet.
Right. Infrastructure bottlenecks, even at this scale.
It ties directly into their spending, though, that CapEx number. Wow.
Huge jump, yeah. What was it?
$17.197 billion just in Q1. They're pouring money into AI infrastructure.
Global network, new chips.
Exactly. They mentioned the new Ironwood TPU. Supposedly a 10x compute power improvement and more power efficient, too.
That sounds like a potential big advantage. And they're as first with NVIDIA's latest GPUs, too.
Yeah, they highlighted that. So really pushing hard on the AI hardware front.
But that spending has consequences, right?
Yeah.
What about depreciation?
Good point. An analyst flagged that management commentary suggests depreciation and amortization, or D&A, growth will actually accelerate through the year, faster than expected.
So those big investments today mean higher reported costs tomorrow, essentially.
Right.
It eats into reported profits in the short term.
It's that classic investment trade-off, isn't it? Spend now for future growth, but manage the current bottom line.
Speaking of profitability, how did that look in Q1?
Pretty good, actually. Operating income was up 20% year over year, hitting $30.6 billion.
And the margin, did that improve?
It did. Operating margin expanded to 33.9% from 31.6%. Google Services, Search, and YouTube mainly saw its margin climb nicely, too.
Okay. And cloud profitability, that's been a key focus.
Big improvement there. Google Cloud's operating margin went from 9.4% last year to 17.8% this quarter.
Wow, nearly doubled. That's significant.
Yeah,
It shows that business is really starting to mature financially.
absolutely. It's not just growing fast, it's getting much more profitable. Though on the flip side, the other bets segment,
Still losing money?
yeah, the operating loss there actually increased a bit to $1.226 billion. Reminds you those moonshots are expensive.
Right. High potential, but high burn rate, too.
Yeah.
What about the absolute bottom line, net income?
Surged by 46% to $34.5 billion. Diluted EPS was $2.81, up 49%.
Impressive numbers. But wasn't there a one-off item in there?
Yes, very important to note for valuation. There was about a $0.65 per share boost from an unrealized gain on equity securities, a one-time thing.
So not from core operations. You have to kind of mentally adjust for that when thinking about sustainable earnings.
Precisely. You need to figure out the underlying earning power.
Okay. And shareholder returns. They've been pretty consistent there.
Yep.
Returned $15.1 billion via share buybacks in Q1 and paid out $2.4 billion in dividends.
They initiated a dividend recently, didn't they?
They did, and they just increased the quarterly payout by 5% to $1.21 per share. Plus, they authorized a new $70 billion share repurchase program.
So clearly committed to returning cash. What about free cash flow?
$18.953 billion for the quarter, and the trailing 12-month number is around $74.9 billion. Strong cash generation.
Okay, so financials look robust despite heavy investment. Let's talk about the businesses themselves, the moats, the competitive advantages, starting with search.
Yeah, search is widely seen as having a wide economic moat. It's built on that incredibly strong brand, but also the network effect, right?
More users means better results and more advertisers, which attracts more users, that cycle.
Exactly. Plus their tech expertise, the data they gather, it all reinforces it. And don't forget those exclusive deals.
Like being the default search on iPhones.
That kind of thing. This secures a massive amount of traffic.
And YouTube,
Yeah.
similar story. Very similar. Huge network effect again, over 2 billion monthly users. That scale attracts creators, creators bring viewers, viewers attract advertisers and subscribers.
And they crossed 100 million subscribers for premium in music recently.
That's right. So it's not just ads anymore. Subscriptions are a big piece too. It also has a wide moat rating.
Okay, Google Cloud. We talked about its growth, but does it have a moat? It's still third place.
Analysts generally say yes, a wide moat here too, based on high switching costs for customers.
It's hard to move your cloud infrastructure once you're set up.
Very. Plus, Google has cost advantages from its massive global infrastructure and those custom TPUs we mentioned. That helps profitability, as we saw.
Right. What about Android in the Play Store?
Also considered wide moat, partly intangible assets, those deals with phone makers to pre-install Google apps.
And another network effect, right? Developers go where the users are, users go where the apps are.
Exactly. Makes it really tough for a new app store to break in.
So search, YouTube, cloud, Android Play. All wide moats. What about their hardware? Pixel phones, Nest.
That's seen as less certain. Generally, no moat currently. Profitability isn't really transparent there. Though there are bright spots, like Pixel doing well in Japan.
Okay. And other bets, like Waymo.
No moat there either, for now. Still burning cash. Returns aren't justifying the capital invested yet. That's the nature of those ventures, though.
Understood. So, strong moats in the core, but let's talk risks. The big one seems to be antitrust.
Definitely. It's a major overhang. Ongoing legal challenges, particularly focused on that search monopoly.
And the remedies could be significant.
Potentially, yes. Things being discussed include forcing them to share data with rivals, or even divesting the Chrome browser.
Wow, divesting Chrome would be huge. When might we hear more?
A ruling on potential remedies is expected maybe around August this year, 2025. So something to watch closely.
Okay. Another big risk. Disruption. AI changing search.
Yeah, the shift to conversational AI. Could it eat into traditional search volumes and ad revenue? That's the fear.
Do the analysts see any signs of that yet?
One analyst did note a slowdown in the growth rate for paid clicks in Google Search and other. They speculated it might be an early sign of competitive impact from AI.
So competition from ChatGPT and others is a real threat.
It's seen as a potential volume and future revenue threat, yes. And competition isn't just AI rivals bidding aggressively for those search distribution deals is also a risk.
Got it. What about the broader economy? Tariffs.
Tariffs, especially those impacting retailers based in the Asia-Pacific region, are expected to be a slight headwind for the ads business.
And just general economic uncertainty.
Always a risk for ad spending. That's in April, maybe in sectors like auto, travel, possibly linked to those tariff worries too.
Okay. And internally, cost pressures.
We touched on the higher depreciation from CapEx. That's one pressure point.
Right.
There's also the risk that major distribution partners think Apple could demand a bigger cut of the search ad revenue share.
Squeezing margins from that side, too.
Right.
And the cloud capacity issue we mentioned earlier.
Yeah, that tight supply demand could mean cloud growth fluctuates quarter to quarter depending on when new capacity actually comes online. More expected later in 2025.
So quite a few risks to navigate. Let's switch to valuation. What are analysts saying? We saw some different numbers.
Definitely different views. Wells Fargo, for example, has an equal weight rating. Their price target is $175.
And their main concern.
Primarily the uncertainty around that transition to conversational search. They see it as a potential headwind weighing on the stock.
Okay. But Morningstar was much more positive.
And much more bullish. They have a fair value estimate of $237 per share. They basically see the stock as significantly undervalued right now.
What's the reasoning for being so optimistic despite the risks?
They acknowledge the tariff and antitrust concerns, but think they're kind of overblown in the long run. They have strong confidence in Alphabet's wide moats and long-term stock.
And their model assumes pretty decent growth.
Yeah, they're projecting about 10% compound annual revenue growth over the next 5 years. They see Google Cloud as a major driver of that.
Do they have, like, best case, worst case scenarios?
They did. A bull case of $266 if search stays dominant, even without exclusive deals, and a bear case of $175 if regulation really hits search market share hard.
That range really shows you how much hinges on those regulatory outcomes and competitive dynamics.
Absolutely. It highlights the key uncertainties investors are grappling with.
Okay, so let's try to synthesize this for you, the potential investor. What are the main takeaways here?
Well, first, you've got strong Q1 financials, good revenue growth across the board, and importantly, improving profitability, especially in cloud.
Second, those wide economic moats in the core businesses, search, YouTube, cloud, Android, seem durable. They provide real competitive advantages.
Third, while the company has these strengths and is investing heavily in AI, the risks are significant. Antitrust is top of mind, followed by AI disruption.
Yeah, those are not trivial concerns.
Not at all. But then fourth, you have strong shareholder returns, and according to some analysts like Morningstar, potentially substantial undervaluation. They see long-term growth potential outweighing the near-term fears.
So it's a complex picture. Dominant company, growing well, investing in the future, but facing serious headwinds.
Exactly. The differing valuations really reflect that uncertainty. How much will antitrust impact them? Can they navigate the AI shift successfully?
This deep dive gives you a snapshot, but things are moving fast. You'll need to keep watching the AI developments and especially the outcomes of those legal cases.
Crucial catalysts to monitor. Q2 earnings will give another data point soon, too.
So thinking about all this, what stands out most to you? What are the questions does this bring up as you consider Alphabet? How much faith do you put in their ability to leverage AI and adapt to these challenges? That's something to really mull over. This is just the start of your analysis.
Wondering how we quickly synthesize info for this podcast? We use AI. You too can boost your productivity with AI thanks to our sponsor, BrainyBeeApp.com. Get instant answers and insights using top AI models like Google's Gemini, Claude 3, and the latest from ChatGPT. Stuck on a tough calculus problem? Snap a picture for an instant answer from BrainyBee. Need a deeper understanding? Ask BrainyBee for easy step-by-step explanation effortlessly. No subscriptions. AI for business, AI for fun. Skip the subscriptions. BrainyBee is #1.